Hi guys, Rohde here, and today we're going to be talking about getting started in commercial real estate investing. In particular, why and where should you start looking to make a direct commercial real estate investment? My clients range from private equity funds and individual investors looking to make the step into commercial. This is Violet. Violet, can you say hi? This video is going to assume around $200,000 of capital, investable capital, to put into a project. And we're also going to plan to leverage that with a fair amount of debt. The competing investments for this type of capital would be stocks, bonds, or passive real estate. Real estate is one of the most powerful tools to build wealth. Land is scarce and they aren't making more of it. And the tax benefits exceed almost any other class. However, direct real estate ownership does come with some liability. You can be sued for almost anything. That said, properly structuring your investment and understanding your own goals will minimize those risks and set you on a path which can continue to grow. I'll state some general goals of 7 to 12% annual cash-on-cash return. I think that's a fair range for the type of risk versus reward for these types of properties. If you're allowing for a lower risk profile, you're buying a very sophisticated, high-quality product versus a credit tenant could produce higher returns than 4 or 5% cash on cash. In the last 2 months, the US government has printed more money than the last 200 years. I think that has to cause some type of inflation. The price for goods is going to increase, some wages are going to go up, and the price for all assets is also going to increase. If you are able to invest in the stock market, which a lot of people have been doing, 2020 has been a year of a very frothy stock market. And what that means is people are investing in those companies which are able to quickly and rapidly increase their prices so that their profit stays constant in the face of inflation. Now, what's happening is that all of these stocks are going up, and at some point you're going to buy into a set of companies that are unstable. So the alternative is to buy into other inflation-proof assets, such as commercial real estate. Do you like commercial real estate? What commercial real estate allows you to do is, while you're locked into a 2 to 4 or 5 year lease, your expenses in a triple net lease are passed through to the tenant. And so any increase in, say, property taxes or utilities, those get passed to the tenant, and the landlord still realizes his same return. Now, after the lease is up, you'll have an opportunity to market and increase your rents based on market rate. And so in that way, owning a piece of commercial real estate is inflation proof. And it's kind of a middle ground between having fixed returns and being able to immediately, on an annual basis, let's say for a residential lease, you could annually increase your rents. So it's a trade-off in that the gross lease, you'll be penalized for 1 year versus a commercial landlord is never penalized, but they don't get to see the gain until a couple years down the road. Again, they're just trade-offs, and the point of this video is to educate you about some of these differences, and for the right investor, commercial real estate makes a lot of sense. Finally, let's talk about the acquisition process. This is something that a lot of my clients either come to me to ask how we do things, or maybe they're a new investor and they want to get a lay of the land before they start their first deal. So the process starts with identifying your submarket. What are your cap rates? What are your investment goals? I think a lot of people just say, I want to do commercial, without really understanding what their goals are. So you've set your goals, you have your submarket. I would reach out to a broker. They know the market, they know if your goals are reasonable. So once you have those, the next steps would be to hire or interview a lawyer, a lender, and work out the rest of your team. So your team really consists of your broker, your CPA, and your lawyer. Those are the 3 most important people when you're a commercial real estate investor. After you've selected your lawyer and you have a rough approval for commercial lending terms, you can start looking at properties. And the first step again would be to submit an LOI. This is a letter of interest. It's usually 1 to 2 pages, non-binding, and it outlines the terms that you'd be willing to purchase the property. It saves both parties a lot of time and costs from reviewing a PSA, a purchase and sale agreement, because if they're not aligned on the terms in the LOI, there's no sense in going down the road of a PSA. If the LOI is signed and approved, then they will in good faith enter in negotiations to execute a PSA. That's where you start to incur some actual costs. You have chase costs, you have due diligence fees, and you're starting to invest in this property. After the PSA is reviewed and negotiated and signed, then you enter your due diligence period. That's when the clock starts ticking and everything must get done. We're talking about environmental analysis, soils analysis, a lease review. You're going to look at the property, the structural condition, parking, zoning. There is just a lot of items to review on a commercial property that you might take for granted on a residential deal, but for commercial, it's vital that all of these items are reviewed, approved, and you either waive the risk or you terminate or you try to work out a concession. And those are really the 3 major options for a purchaser: is you can waive, you can accept, or you can get a concession, or you can terminate on the basis of this incurable problem or something that you didn't expect. So after you have this due diligence period, once you pass the expiration, your earnest money will go hard. And that's a big difference. With a broker, you want to talk about how much earnest money, what goes hard, and when does it go hard. So those are different milestones for when your money is irrevocably committed to the seller. Finally, after the due diligence period has completed, you've run title, you've done all those examinations, then you're ready to close. Congratulations, you're now a commercial real estate landlord, and all it took was 7 minutes on YouTube. Thanks guys, I've got a lot more videos to introduce you to commercial real estate investing. Feel free to like and subscribe if you're interested in more content. Thanks.